Acting like Skittles. All right. Good morning, everybody. Hopefully, y'all are having a great Wednesday, hump day. Looking at my yesterday's trades. I guess I didn't type in the day that I closed, so let me do that right quick. Good morning to the two people that are in the chat right now. Welcome. Gonna make some decent money today. It's what it's looking like. I got some Schwab puts and I got some United Airlines calls, so I think we're gonna make some decent pocket change, but we'll have to see if my stuff ever decides to load, I guess. All right, so yesterday I did I think it was a SPY call debit spread whenever we went above the big trend line that everybody was watching, the mother of all trend lines. So let me type in that. This one I closed by myself. It did not expire. And that should update here. No, I guess not for some reason. I actually typed in the wrong things. But anyway, let's head on over to the Robinhood account. What do I think of Tesla today? It's a good question. I haven't looked at it just yet. Let me review my other trades that I made, and I'll get to Tesla. So I opened a Schwab $97 long, just a regular put option that I bought for $340. Currently, this is going for $560, which is, I'd say it deserves to be a little bit more price. I mean, it has $6 of intrinsic value, basically, so these aren't priced the way that they should be. Given that it only has 2 days until expiration, there's not that much more volatility that can be experienced. I would say they're probably worth a good $650 if I had to give it a good guess. So let me try to sell to close these at I'll call it $640. I mean, they should be worth $700 now. Hell. I guess since it's just right off the jump on the open, nobody's really trading these yet. They're still deciding on whether they want to buy the puts or not. So we might have to wait this one out, but they should be valued at around $700. So I'm going to try to close it at $7. And that'll be like a 100% profit or close to that. I bought them originally again at $340, trying to sell them at $700, given that there's about almost $700 of intrinsic value. What do I think of PNC earnings? I haven't looked into that. I just traded Schwab for their earnings this morning, which was a pretty decent miss from what I saw. I also did a United Airlines call that I think should be doing well, but let me check. UAL call, it's only up by 18. It should have been up a lot more from what I thought. Let's see. UAL, check out Wells Fargo. Wells Fargo is down 30 cents this morning, so it's not really moving much. But United Airlines starting to drop. I think that's my break-even price, right around $52.40. They were at 52-week highs yesterday, and I thought that they would hold it because they did have a good earnings report compared to what Wall Street expected. But currently they're pulling back, I guess, kind of with the rest of the market. It's what's looking like the rest of the market is pulling on back at the moment, but it doesn't look like that Schwab trade is getting filled for me, so I might have to cancel and replace it. All right, so they're asking for $575 to $695. It still should be valued at like $700. So I don't know if we should just wait it out or sell ourselves a little bit short. I mean, we have an $87 strike price, right? So just based on the intrinsic value alone, 87 minus, let's say it's trading at 80.5 right now. This should go for at least $650. But the mid price or the bid price is at $575. So kind of ridiculous, but I guess because of the implied volatility with the new earnings, it's making it a little bit more difficult to get out. But you know what? I'm not going to be too greedy and worry about $50. I'm going to put in the order for $650, and that got filled right away. So I basically just sold it for the intrinsic value, which I feel like I'm getting cheaped out on that, but it is what it is. It's still $300 of profit, which I can't complain about. Let me post it to the premium Discord. All right. Closing options alert, premium. All right. Just took profits on the Schwab 87 put that expires this Friday on the 20th at $650 each, or I guess just $650. I only bought one. $651, I should say. And again, I originally bought that at like $340 or something like that. So nice little $300 profit. Originally bought at $340, so $651 minus $340 is actually crap. $311 profit. All right. And of course now Schwab is actually below $80, so we could have sold that for even more. But it is what it is. I'm not going to complain about $300 profit. United, on the other hand, let's check it. Currently trading at 52, so it's right at that support level that I have drawn up. SPY is trading at $3.99, so not really moving much at all after the retail sales report. But checking in on Tesla, currently trading at $135. Jesus Christ. 3% up today. After yesterday was like another 2 or 3%, I think. So it's just definitely on a rip right now. And it's kind of what we're seeing for pretty much all of growth, it seems like. So if we look at the Qs, it's up a shit ton over the last 4 or 5 days. Yeah, 1, 2, 3, 4, 5, 6 days. I think we're probably going to continue to push up, given that the Treasury yields are falling like hell right now. If you look at the 10-year Treasury yield, it's all the way down to 3.4. And the 2-year Treasury yield is also down significantly. The United Airlines call, it's losing its value, but I want to check in on the yields this morning, and we'll talk about why the yields are down so bad. It's actually a negative, but the markets are seeing it as a positive, so we'll talk about that. If we look at the bonds market, though, looking at the 2-year yield, this basically almost directly reflects the current federal funds rate. Currently, it's at 4.08, so basically 4.1. And the federal funds rate, if you look at the FOMC watch tool, I think it's between 4 and 4.25. Actually, 4.25 to 4.5. So the 2-year Treasury yield is slightly below. Interesting enough, but if we look at the 1-day chart here, good morning, Guile. This dropped heavily ever since around 8:30, and the reason for this was the retail sales. So why you clicked on this video is because the stock market was falling based on the 10-year Treasury, or based on the retail sales. So if we go to the economic calendar, I'll actually just go to my Google Calendar. That'll be easier for me to find. Retail sales month over month came in significantly worse than what was expected. So I said retail sales is a proxy for consumer spending. If consumer spending is high or better than expected, the Fed has more room to raise rates to cool off the economy, which would lead to bearish price action. And if the consumer spending is worse than what's expected, either one, this means that a recession is confirmed. Stock market would sell off if it comes in significantly worse than expected. And then the second situation, if it's worse than expected, if it's slightly worse than expected, the federal funds or the Fed's interest rate hikes have become effective in cooling off the economy, which means that they have less work to do in raising the interest rate. So if we actually go to the report, it came in, I guess, slightly worse than expected on the month-over-month reading. So the expectations was negative 0.8, and the actual was negative 1.1, which is about, 1.1 over 0.8 is actually about a 37% miss. So you would think that that would be significant enough to spark recession fears, and we are starting to see the recession fears with the bonds going up in price. Whenever the yields go down, the prices go up. So I think I'm just going to keep on holding. I think it's more bearish than it is bullish, as long as the recession is the top narrative. But if we look at the other economic news or economic calendar events, we have the PPI, which is the producer price index. This came in lower than expected, but that should have been expected because we had the core CPI, or the consumer price index, coming in last week, which was about 10% lower than the month before. So PPI was basically the same, to where we saw about a 10% drop in the producer price index. So usually they kind of go hand in hand with the year-over-year reading. But sorry, I just got a notification. Yeah, I know I sold the Schwab put. That is old news. But yeah, that month-over-month core retail came in at negative 1.1 versus negative 0.4. So that's significantly worse than expected, and that's the core. So that excludes, I'm assuming that excludes food, and that excludes, what's it called? Gas. We'll see. Core retail measures the change in total value of sales and retail, excluding automobiles, actually. It's an important indicator of consumer spending. It is also considered as a pace indicator for the U.S. economy. So the pace of the U.S. economy is slowing down significantly for the month of December, when you would have expected it to actually speed up because of the holiday season and more spending generally in that time frame. But not exactly what we saw, which I see as pretty bearish. I see as us going into a recession, but the market's not really caring too much, kind of brushing it off so far. SPY is currently trading at 399. So if we're looking at technical analysis, I think that we're actually bullish because we're above the big important trend line that started at the beginning or the end of the bull market at the start of January. So that is bullish. So if you're trading with the trend, I would definitely take the upside this morning. But if you're trading the news, I think we're going to come down. So you could, I guess, leverage both ways. Funnily enough, I actually said that I was both bullish and bearish this morning in my morning market update. So I think I'm going to take on a call debit spread to go with my call credit spread that I got, assuming that we're going to be under 399. And my assumption, we're probably going to try to break that 400 mark again today. And we're getting close to it already. So let me Let me try to take that right quick. Gold is soaring up like hell right now. Go figure, with the dollar coming down, with the rates coming down, gold is going to go up. The gold leaps call that I bought is up by $850 at the moment, so very healthy gains on that one. But checking into that SPY call debit spread, assuming that we're going to hold the trend line and technical analysis stays intact. We're currently at 55 on the RSI, so that's bullish. Above the trend line, so that's bullish. So you're trading with the trend. I'd say we probably try to go up to 400 again today. And looking at the, we could do a 400 for a 1 call debit spread. That's currently trading at 28 cents. If SPY does go back up to 400, that means that these would be trading roughly for 40 cents each. So it's about a 30% profit. Trend could be reversing at the moment. It does seem to be under 50 RSI, but this is just the beginning of the candle. We still have, let's see, what time is it? We still have about 3 seconds to the close of the candle, and it looks like it might end up below the trend line. No, it actually ended above. So, yeah, looking at that call debit spread now, it's going for 33. So basically, I'm taking both a bullish and a bearish trade for today. Bullish based on the trend and the price action, bearish based on the news. So, good way to diversify, I guess. I want to get it for cheaper than 30, if I can, possibly. And I don't want to spend a lot on it. I would probably only spend like 200 or so. I might actually be able to snag them at 29 each. Alright, so I'm looking at 7 of them for 29, or I guess 30 cents each now. Bit keeps moving up, or the ask keeps moving up. Alright. So I just opened that. Well, it's still pending, but I placed an order to open that call debit spread, assuming that we're going to go to 400 again today. Just opened a new SPY call debit spread. This is a day trade expiring today. Today's the 18th, and I got them for 20. No, I got them for 30 cents each. And strike prices 400, 401. And again, the reason for that trade, technical analysis was looking bullish. Above 50 RSI for the 5-minute chart, and hanging on to the big trend line since the start of 2022 and end of the bull market. Technical and TA says bullish, but news of lower retail sales says bearish, hence the low weight for this trade. Looks like United is taking a dump at the moment too, so might end up taking the L. Yeah, we're definitely below 52 on that, which sucks. Guess I should have taken profits right on the open. Thoughts on Netflix? I'll go over Netflix after I get out of this UAL trade. All right, the call credit spreads that I opened, assuming under $3.99, are currently up by $10, and then those call debit spreads I just opened are down by 20, so we are losing a little bit more than we're making from the bearish trade, but that's okay. It'll probably even out at some point. Anyway, looking at that United Airlines call, originally opened it at 222, so I didn't spend a lot of money on this trade, but I did assume that they would have a pretty sizable earnings beat, which they did. 246 earnings per share versus 206 is what was expected. I think I could be able to wait it out and get out at 52, but with momentum possibly shifting down for SPY, that might just drag everything down with it, so you are taking on that risk. Still looking bullish for us. All right, we're getting close to 400. We're currently trading at 399.18. We got all the way up to 399.7. So I think if we pass that, we'll probably go to that 400 mark, but not quite there. We got some Fed members speaking this morning. It says, Fed Bullard says prospects for a soft landing have improved markedly. I'm not sure. I think he means remarkably, but Fed Bullard said in December projection end 2023 rate will be 5.25 to 5.5%. We already know that. That's not news. Inflation will probably recede in 2023, but not as much as the financial markets are expecting, which I do believe in that point. I think it's going to take a while for everyday items and services to lose their value just because there's still a lot of money in the economy. Let's see. Bullard says wants to err on the side of tighter fiscal policy to allow disinflationary process to take hold, which I'd say is very important. We did see disinflation for the last month. I think we had a negative month-over-month CPI reading, which was good, but it still needs to come down significantly more. So, but yeah, that call debit spread currently up by good, $40, $50 or so right now. And then I'm going to try to get out of this UAL 50 call that I bought. Currently going for $2, $1.90 to $2. I'll probably be able to sell it for 1.93 or so, if I had to guess. The ask moved down to 195, so I won't be able to get that. 192, I guess, is what I'll have to sell it for. Yeah. All right, so took the L on that one. Not a major L, so a little bit better. But let me type this into the Discord. Currently trading at 399.4 for SPY, definitely above that trend line. And we hung on to 50 RSI, so looking bullish so far this morning. So it looks like we're going to hold on to that call debit spread for right now. Looks like that screenshot did not go through correctly. Come on now. All right. Closing options alert. Premium 101. Just took profits, or just cut losses. Let's just cut losses on the UAL. 50 call expiring 120 at, what was it, 192 each. Oh, did I close both of them or did I close only one? I had two of them that I was supposed to close, I think. Let me check. No. I guess I did only have one of them. I thought I had opened two. But maybe not. UAL. Just to double check. Yep, no positions in UAL. Let me check the Schwab. Currently trading at 80.5. So basically, same price that we sold that put option at. And so far, again, it looks like we're above 50 RSI, so we're going to keep trending bullish. Unless there's any sort of news that might send us other direction. Justice Department says it's to announce international cryptocurrency enforcement action. Yay, more government control. Just what we need, right? Fed Bullard said we'll want to lean to the high side of rates for insurance even if inflation falls to make sure that the job gets done. I mean, the risk of that is people losing their jobs more than necessary. So that's the Fed's dual mandate is stable prices, i.e. getting inflation down, and then also, you know, maintaining job security so not a shit ton of people get laid off, which are two kind of counteractive forces. Whenever people start to lose their job, that means inflation is coming down because people have less money to spend. And whenever people have more money to spend on the same amount of goods, then the price of those goods goes up. So it is a sticky situation that the Fed has found themselves in. Thoughts on Netflix. So let me check Netflix. My trading process for earnings, I'll show you. So I'll go back to I usually look at the yearly chart. I'll look at the hourly chart. Those are the two main charts that I look at for earnings. Right now, on the yearly chart, we basically filled that gap, right, from 330 all the way down to 245. And the next step in my process for earnings, I'll go to earningswhispers.com. Check on the stock I'm looking for, so Netflix. Their expected earnings is supposed to be 45 cents. Okay, so we have 45 cents as the expected earnings. I'll write it down. Add a drawing. You can add text to this. 0.45 EPS. Expected. And next I'm going to look for historical data. So go to Netflix earnings history. My favorite place to go to is marketbeat.com, just because it's easier to read than anybody else. You can look at the nice graph right here, but I like to go down to the little table that they have. So I go back usually 2 years. So 1, 2, 3, 4, 5, 6, 7, 8 quarters. It's 2 years. They had 119 earnings per share, 375, 297, 319, 133, 353, 320, and 310. So we divide that by 8, 22.26 divided by 8. Their average earnings per share has come in at 278. So let me edit this. $2.78 EPS historical HIS, and then I'll type in actual. We don't have actual yet. This is gonna take up a lot of space since it's like this. Maybe we can just comma separate it instead of now we want to look at their revenue. So the most important things are revenue, earnings per share, and then usually I like to look at cash flow statements after the report comes out. Obviously, you can't really predict that beforehand because you don't know how much money the company is going to spend. But if we look at revenue now, the expectations, if we go back to earningswhispers.com, Netflix, revenue estimate is 7.82 million. 7.82. Wait, was that million or billion? Yeah, billion, sorry. Expected. Now we check the historical. 1, 2, 3, 4, 5, 6, 7, 8, 664, 716, 734, 740, 748, 771, 787. All right. 797 and 793. So 60.1 billion revenue over the last 8 quarters. So 60.1 divided by 8. Average revenue has come in at $7.51 billion. 7.51 bill historical. And then actual we don't know yet. Okay. So now we have expected and historical. And we're waiting for actual, which is going to come out on Thursday, right? 1:19 after hours, so we still have a day. But let me move this over. To where we can actually read the whole thing. Hopefully. You know, live the fast life. All right, so now we can read it. Now we do price analysis. So I start with an earnings analysis, just looking at previous data, and then we can make an assumption on if they're going to beat or miss based on that. Oh, I just deleted the data that I just wrote down. Well, that sucks. Okay, well, I guess I'll just do the price analysis, and I'll do that later on. But, so what stands out here? All right, so first thing that stands out to me is the huge gap that we did end up filling. It's still a gap nonetheless, which is significant. So the low of this candle was 333.22, so that is going to be a current resistance. 333.22. I like to color code this as blue since it's on the daily, yearly chart. Control Z. Can I do that on? I don't think I can. Not on Thinkorswim. I wish. There's got to be some sort of function, right? To where I can undo changes, but I don't think so with Thinkorswim. If anybody knows, let me know. But high for this was 248.7. Yeah, this isn't a Word doc, unfortunately. What was it, 249? No, it was 248.7. Again, set it as blue. All right, so now we're looking for other price levels that are important. There's one right here. So this is a candle of significance, where it's a larger candle than pretty much all the other candles. There's also another gap to fill right here that we can use. So what's more significant? I guess I would say the gap is more significant than this candle of significance just because it's not that big. It's probably about twice the size. Usually whenever I'm looking for candles of significance, I'm looking for like very significant candles. But we got this low on the gap, which was 314.42. All right. And then the top of the gap, or I guess the bottom of the gap, I should say, but the high of this candle is what I'm looking for, was, I can't read, 303.39. All right, so this is going to go, this blue again. All right, so we have those few price levels. We should probably make some more room to the upside. I'm sure that there's more potential for upside if I had to guess. You can look at what the markets expect. So the markets expect $30 into either direction. Currently it's trading at 328.7, so basically 329. So the option market expects this to be between 359 at the top of the week. So I'm going to draw this as a rectangle, and then $30 below that would be back down to the 200s, barely in the 200s, but still 200s nonetheless, and that would be 298. So that is your expected range for this week. So I usually like to fill in the expected range with price levels that I could pivot at. I guess this one is kind of out of the realm of possibilities, unless it's like a really bad earnings report, which is possible. But generally it sticks within this risk range about 60% of the time, whatever the standard deviation. I think it's like 62% of the time. So basically 2/3 of the time it's expected to be in this range. But this one's definitely a candle of significance right here. Let's see. 355.09. Close was 390.09. Divide that by 2 and you get 372.59. So that's going to be the top resistance, 372.59, which is slightly above the risk range where the market's expected to be by the end of the week, but that's, still within the realm of possibilities since it's not that far out. So if you're super bullish, if you think that Netflix earnings is going to come in much better than expected, you would probably expect it to come to this 372.59 price level. But now I go over to the hourly chart. See some significant price levels here. There's one candle of significance. This is another one right here. I'm just going to eyeball it and not do all of that work all over again just because it's a little bit much. I want to save time for real. So I'll call it 308.7 just for round number sake. And it'll be in yellow since this is the hourly chart, 308.7. I am just butterfingers today. There we go. All right. This closing price is probably significant. Close was 327.57. There's no price levels above this for the hourly chart, so that's basically all the price levels you have. You have some support at 327.57, 314.42, 308.70, 3 at 339, and then a resistance at 333, as well as 372. So the average earnings per share was significantly higher than Wall Street estimates. And the last earnings per share came in at 310. Wall Street, again, expects this to be 67 cents. So they're expecting a very steep drop for their earnings per share, which not sure why they would expect such a bad earnings hit. If I had to guess, this is probably going to be a beat for earnings per share. Revenue, last one was 7.93. The one before that was 7.97, 7.87. So probably going to come in around 7.9. And Wall Street expects 7.82. So both the earnings per share is much lower than what it should be. Revenue probably lower than it should be. So probably going to be a double beat. And now the next important thing is, what is their forward guidance? So what are they expecting for 2023? Obviously, we don't know that until the report comes out, which is tomorrow. So if I had to guess, I think this one is going to head up. Now, the way that I choose what strategy I'm going to use, if I do a spread option or if I just do a regular call or a regular put, is going to be based on IV percentile, which has been dropping pretty heavily over the last month, down at 8%, right? So this means that 92% of the time, implied volatility has been higher than it has over the last month. If we go back to the yearly chart, this is 50. So it's basically right in the middle. But this is also ahead of an earnings report. This is a very common trend, interesting enough, to where basically every earnings report has been kind of downplayed. So this makes it a better opportunity to go long with buying a call option than it would to be doing a call debit spread. There's more opportunity in buying a call right now. So if we look at actually buying a call for Netflix, looks like the call debit spread is doing pretty well. It's actually at 54 cents a piece. Oh, that's the call credit spread. So that's actually losing its value, but the call debit spread kind of hanging in there. Not quite at 40 yet. That's the value that I want to sell it at, but I haven't got there yet. But yeah, let's check out Netflix. So I would probably just buy a regular call option, depending on how expensive they are. Like, obviously, I'm not going to spend like $1,000 for this, but I'm sure that the call options are still expensive just because of how expensive Netflix is. So if I want to buy, I don't know, say the $330 call option, that means in order for this to make profit by the end of the week, I would need Netflix to be above 330 plus 15 almost, 14.5. So it would need to be above $344.50 for me to break even on Friday whenever this expires. The expected range is up to 357. So if they have a really good earnings report, then possibly you could make 357 minus 345, we'll call it. You would make $1,200 off of a $1,450 trade. So that's not a bad opportunity, but that's assuming that they go all the way to the top of the risk range and assuming that they have a very good earnings report. Based on the estimates, I would say that they would have a good earnings report, but I just don't want to spend $1,500. So what I would do, probably a call debit spread, and I would just choose one of these price levels. I would assume probably above 333. So the way that I would set it up, probably buy the 330, sell the 332. This is only $135, which means that you can make up to $132, or I guess you're spending $118 to make $132. So better than 1-to-1 risk-reward ratio. So that is actually a decent opportunity to take on. This trade I would probably only take on, usually for earnings, I don't spend a lot. For this one, I would probably spend like max $400. So for me, I'd probably buy like 3 or 4 of these. But still kind of waiting, I guess, for the markets to pick a direction, because if we have a bad day for the markets today, then that would bring Netflix down with it. Currently, it's trading at $328. Next price level down is $327.57, so we might be able to get it slightly cheaper. I wouldn't imagine it would be that much cheaper. But yeah, that's the trade that I would take on for Netflix on their earnings report. The bid ask on this is kind of wildin'. 90 bid, 135 ask. So you would have to check on Aries for a better bid ask spread. Well, that is not the right link. That's my referral code. If you sign up with it, you'll get $100 if you stay on with them for 5 months. They pay you $20 a month as long as you keep your account above 500. So you have to deposit 500. You'll get $100 back if you stay for 5 months or more. But let me log into my account. They will have a lot better bid-ask spreads than Robinhood. We can just look at this right now, and you'll see evidence of it. 375, 563. The only reason I don't use Aries is because I have a pattern day trade restriction for not really sure what reason, because I know that I haven't day traded 3 times in a week with this account, but it is what it is. Why are the bid asks so bad on Robinhood? Because they love making money. The wider the bid ask spread, the more that the money or the market makers make. So that goes right into their pocket, basically. Screwed up is what it is, but that is just kind of the name of the game. But yeah, Netflix, we're looking at the 330, 250 call debit spread that's expiring for this Friday. And Aries is quoting me for 115 at the bid. The ask is 115, so if you put in an order for 115 on Aries, you're probably going to get filled. You might have to drop it or you might have to raise it by like 5 cents. Yeah, the ask just moved to 110, so you'd probably be able to get in at between 115 and 120. But if you look at Robinhood, the ask is 135. So if you just go with the bid and the ask, you're going to pay like $10 more here. Right? So that's why Robinhood is kind of a pain in the ass to use, but you can use Aries to quote what Robinhood should give you. It's not to say that they always will give you it, but it's always worth a try. So if I type in 115 for this right now, there's a chance that I get filled. And again, I'm willing to spend like $300 to $400. I might have to increase my price to 120, but we'll try 115. Aries is quoting me for 115, so I'll place my trade accordingly. And we actually did get filled. But yeah, that's the Netflix trade that I wanted to take. I think that they're going to have a substantial beat just because, again, like the Robinhood, or not the Robinhood, but the Wall Street estimates are so horribly low that it seems super unlikely that they would not beat on it. So let me type that into the Discord. Huge gap to fill on the 1 week SPY graph. Let's see. New options alerts. Premium 101. Just opened a new Netflix call debit spread. This one expires Friday, 120. And the strike prices I chose were 330, 332.5. And I got them for, what, 115 each? All right. So that's my earnings process, basically. Giving away my trade secrets. It worked out really well for me for United Airlines and for, what was it, Charles Schwab this morning. But obviously I'm not going to be right on every single trade that I make, so don't take whatever I say as gospel. This is just my process and how I've learned to trade earnings. Everybody has a different process, so you got to figure out what works for you and if it's profitable or not. I'm fairly good at earnings. I would say my win rate for earnings is like 60 to 70%. But sometimes the losses can really add up. So I've been sizing down my earnings trades to like just a few $100s rather than, spending like $1,000 and just going ham on it, which means that I'm not going to make as much money if I'm right, but at least I'm not going to lose a shit ton of money if I'm wrong. All right, the call credit spreads are down 5. The call debit spreads are down 28. How the hell do you lose on both a bullish and a bearish trade? I guess it's trading neutral right at the $3.99 strike price. That's annoying as hell. What an annoying... It's funny how I chose bullish and bearish sentiment for today, and then we might just end up neutral. That would be the funniest thing. I'm wrong on both sides. But yeah, let me log my trades, and that will probably be the end of the day for me. We got about 10 minutes until 10:30. If y'all have any questions in the meantime, let me know, and I will be filling out this nice handy-dandy spreadsheet. Also, note, I am coming up with an app that'll do this for you very soon. Very excited for it. Let me pull up the screenshots. This is just the design phase. Haven't actually built out the functionality just yet, but this is kind of what it's going to look like. There might be some added functionality to it, but basically it's going to show you your portfolio versus SPY. So the name of the app is called Alpha, which is, how much you're outperforming the market. If you're not outperforming the market, then what's the point, right? So hopefully this will give you all enough data to improve your trading, and it's going to have some artificial intelligence kind of put into it, which is going to kind of act as a coach almost. In the beginning, it's not going to be as good just because it's artificial intelligence. It needs to learn how to react to things. When do I think it'll be ready? It should... Don't quote me on it, but it should be ready the first week of February. That's what I'm hoping for. Fingers crossed here. We'll see. It's going to be a web app. It's not going to be a iOS or Android app because I don't want to pay the 30% tax that Apple charges. So, anyway. All right, let me zoom out of this, type in all my trades for today, and then that will be the end of our session. All right, I think I opened 2 or 3 trades if I remember right. And I do have some more trades that I opened yesterday that I did forget to log. Shame on me, right? But luckily this app will do it for me automatically at some point. That's going to take a couple more weeks in the development process, but closed both of these trades today. It was UAL, and the other one was Schwab SCHW, UAL was a call, long call, bullish sentiment. This one was a put, long put, bear sentiment. And both of these were expiring for 120. Get your coins. I'll support it all the way. Yeah. Yeah, I mean, this app is going to be a lot more useful than the spreadsheet that I have. I mean, the spreadsheet that I have is like, we're going to have all the stats that are on here, but then we're going to add more and then that AI coach functionality to it. So that'll hopefully give it a little bit more value to y'all. But strike prices that I chose for the long call on UAL was $60. The put for Schwab was $87. The $60 call, I think I paid $230 for it, but let me always double check. UAL call. Do I think SPY will go down by the end of this week? It depends on that trend line, I feel like. And then whatever other economic data is coming out. So let me check on that after I do this. But sold the UAL call for 192. Originally bought that for 222. 192, 222. So $30 loss there. Just one of them that I opened. 222, 192, and then the Schwab put I paid $330 if I remember right. Closed at 651. Originally opened at 340. 3.4, 6.51. All right, so, well, drag this down. And I opened just one of those. Wish I'd opened more, but it's okay. And then the 3 trades that I opened this morning, we'll type in new options alert, sort by that. And then go to the first opening trade. Was the 400-401 called debit spread that I paid $30 each for. SPY call debit bullish trade. Expiration is today, so it's a day trade. And DTE would be 0. Strike prices I chose were 400 for the long call, 401 for the short. I opened 7 of them and I paid $30 each. I haven't closed them yet, so we won't type in that detail. But the other trade was the Netflix call debit spread bullish. Expiration date is 120. Strike price I chose was 330 for the long, 332.5, and I just bought 3 of them at 115 a pop. Kind of want to add a risk to this, but we'll leave it. And I want to make sure that my dang calendar is working correctly. I keep forgetting to change the freaking dates. I have it for December on most of them, so let me actually go through and change. I know 117 should be filled, but it's showing it as blank. I didn't close any trades on 117, and it should log that right there. Oh, I have it for 2023 or 2022. Annoying. But yeah. Let me change these dates. But made $281 on the realized profit and loss today. And by the way, this is realized profit and loss. This isn't unrealized, so it doesn't count any of the trades that I still have open, which I do still have. Some bearish trades for banks open that I might take a significant loss on, so these trades might be wiped out depending on how the banks end up trading at the end of the week. But $281 profit today, $80 profit yesterday. Monday was MLK Day, so couldn't really make any profit there. But yeah, that's the end for today's session. Kamala asked, do you think SPY will go down by the end of the week? So it's going to depend on the economic data that's coming out. So if we go to the calendar, retail inventories just came out at 10 a.m. I didn't pay attention to that, but we can go to the link for it. So retail inventories excluding auto, what the heck? January 18th came down 0.3%, which is inflationary. Whenever inventories go down, that means that companies can charge more. Whenever the inventories are high, they need to get them off their shelves, so they lower the prices with sales. But now we're having the opposite effect, so retail inventories are going up, which means that they can charge more. So that is inflationary pressure. Tomorrow we have the initial jobless claims coming out at 8:30 in the morning. Philadelphia Fed Index, manufacturing index. So that is a gauge for production. If that comes in worse, that means production is falling, which is inflationary because prices are just based on production and demand, supply and demand, I should say. And then you have Brainerd speaking tomorrow at 1:15. Harker speaking at 9 a.m. Friday, and then Waller speaking at 1 p.m. On Friday. So that's the economic events. So the initial jobless claims, if it comes in significantly worse than expected, that would be bearish. If it comes in slightly worse than expected, then that would be bullish. And then if it's higher than expected, that would also be bearish. For the Philadelphia manufacturing index, since that is basically a production proxy, a supply proxy, if that comes in better than expected, that would be disinflationary, which means that the Fed has less work to do on raising interest rates. If it's worse than expected, that means that production is falling, which means that prices are going to be going up. And then with Brainerd, Harker, and Waller, it really depends on what they say, right? Can't really predict what they're going to say. But, yeah, still got the trades that I had open this morning. So the call credit spread and the call debit spread, just going to keep on hanging in there. I want to check in to see the RSI before we close out of this. So let me type in, or let me pull up RSI MACD indicators. Yeah, I have the call credit spread, and then I have a call debit spread. So either way, hopefully I'll make money. All right, we're just below 50 on the RSI, so I think we're going to give up on the 400 call debit spread. And we're right at that trend line, so that could be support. But considering we're falling down on the RSI just below 50, I think it's bearish. Either that or it's just neutral. I mean, if RSI just keeps hanging around 50, that means nothing's going to go on today. But I think we're going to get a move in one direction or the other. So I'm going to close out of this call debit spread at a loss, and then hang on to the call credit spread. I have 7 of these that I want to close, I think. Yeah. I'll try to get out at 24 each quickly, hopefully, and then call that an L and be on my merry way. Yeah, I closed them at 25 each, actually, so slightly better than expected. Oh, God. There we go. Closing options alert. Premium 101. Premium. Just cut losses on the 401 call debit spread expiring today. 118 at 25 each. And it's a SPY call debit spread. Originally opened at 30 again, so small loss, but loss nonetheless. Originally, opened at 30 each. Should say 7 at 30. So $5 loss on each one times the 7 that I open, $35 loss. And then we're hanging in on the call credit spread, assuming that SPY is going to be under $3.99 today. So hopefully that trade turns its head around. But currently we're just right at that $3.99 mark. So not much changes going on. We're right at 50 RSI. So we could just get a flat day for today, and maybe we could turn it into a iron condor. But I don't want to have to deal with the analysis on that. So if I had to guess, I would probably assume between 396 and 402. Right now we're trading at 392. You'll probably get more money for the 396 puts if I had to guess. Looking like a flat day. Might fill the gap. Yeah, I mean, I'm looking at the trend line. I think that's the major kind of pivot point. Either we're going to go one direction or the other, and we're just kind of trading on that trend line. So people are indecisive on which way they think the markets are going to go based on it. If I'm looking at the 396 or 397, let's see. Put credit spread. That one is paying us. It's only $10, so that's not even worth it. Yeah. Screw that. Even if I do a 397, 396 put credit spread, it's like 16. So piss poor credit. I'm not taking it. And I will catch y'all tomorrow at 9:30 in the morning. See everybody.